Good morning, traders. Forex market, we are back in action. Today is Tuesday. We want to talk about pound Japanese yen, guys. We've been talking about the New Zealand Japanese yen 4 or 5 days ago. We were prepared for an upside breakout, and of course we followed up on that. We sit on a bullish position on the New Zealand Japanese yen. However, we decided that we can expand that into the pound Japanese yen. Obviously, high correlation between the two, so we definitely realize the type of risk we're taking by participating in this move just as well, right? Having said all that, the technical situation is solid, is strong, right? So that's why we're kind of doubling down on the Japanese yen, right? And I want to show you what's happening here on the pound Japanese yen. We've been following a strong downside move. It was a couple of weeks ago, right? I mean, not even that. But it was a strong move that went from what we call coast to coast. And I'm talking about the purple system, which is kind of a short-term cycle system that represents the short-term cycle, if you will. And we've seen price action go from the very edge, 166.15, all the way to the very edge on the opposite direction, 160.70, spiked the hell out of that level, and then turned around aggressively, ended up positive. That was the first sign, right? Since we were involved with the New Zealand Japanese yen, we did take notice. However, we didn't pull the trigger. We felt much more comfortable to do that yesterday, and I'm going to show you why. We've noticed that on the weekly bar, right, on the weekly scale, price action went back up, left that really aggressive spike, right, taking the previous lows, mind you, right there, and of course turning around and closing above that area, right, 162.28 and 162.44. So that was a strong indication that price action is indeed turning around and it's heading back up. Now, if it's heading back up, we think it can easily hit 164.40, which is why we're aiming at that level. However, we also believe it's going to go beyond and chase 166.73, which means that's a big move right ahead. We're talking about 400 pip, potentially speaking, in the pipeline here. We're probably going to want to break down that move into two separate steps, right? Step 1, 164.40, then stepping aside, waiting for, you know, the breakout, the clarification of that of a breakout, prices basing itself above that level, and we engage with the second step, chasing 166.73. This is how it looks like from the weekly perspective. Honestly, it can go even beyond. It can go and chase the previous highs around 168.60, I want to say. Roughly around that area, 168.60, 70. So it's definitely going to be interesting, and it's also supporting, just by association of correlation, it's definitely supporting the bullish campaign we're in right now with the New Zealand Japanese yen. By the way, we did increase the position size over there because price action gave us that green light to proceed. Here on the flip side, kind of, we're still very what's the word I'm looking for? Conservative, right? We feel that a technical correction could be imminent. Just a local one. We don't think price action is going to go far beyond 162.20 here. May spike it a little bit, right? May test that area a little bit. And if it does, we want to be here, wait for it, and pick it up right when it does that, right? Double down. If not, if it starts to push forward, we might have a chance to slip in another trade, another 5K before we approach the target, which is, again, the first one, right? Then we have a second one later down the road. As far as stop loss level goes, guys, we are sitting comfortably at 160.130, keeping a healthy distance from that area. Like I said, it may be tested, so we want to make sure we're not going to be spiked out unnecessarily, if you know what I mean. That's pretty much it. Pound Japanese yen, that's pretty much you know, what I had to say about the situation here. We'll definitely be back to follow up, and we'll keep you posted. That's about that. Moving on to the next one. See you there.